We go to part three of the final part of commerce. So we've looked at part one, we've looked at part two. Now we go into part three. So part three, we're going to start with international trade. We look at barriers to trade, okay, which are some of the challenges that people encounter in international trade. Then we're also going to take a look at ZRA and other authorities. Then we'll finish with types of securities at Lusaka Stock Exchange. Okay, so we're going to look at types of barriers that business people encounter in international trade. The first is they are called technical barriers to trade, okay, or TBTs. So the technical barriers to trade are rules or standards or regulations that make it difficult to export to another country. You can't just export products to another country. There are rules, there are standards, there are regulations that must be followed, and it's very important to understand these regulations, these standards, these the rules, okay? Because of this, they make it's not just straightforward to trade with another country, okay? So examples of these rules, standards, or regulations include product safety standards. So you can't just start trading in another country. It has to pass certain safety standards. Whatever product you are selling, it has to pass certain safety standards. Okay. Also, there may be ways to package and label. Okay, laws that govern how to package and label in a given country, from which are different from the laws in your country. Okay, there are also health inspections. Your product has to be inspected if it passes health checks. Okay, so the impact is Zambian goods, for example, may be rejected if they don't meet strict international standards. Or, for example, you want to export some Zambian goods to Malawi. If they don't reach certain standards, then they may fail. Then there is also an issue of cultural differences. Okay, these are differences in beliefs, traditions, and customs. Okay, so this may affect the product acceptance. Maybe you want to be selling pork products, maybe what we used to call michopo. I don't know what they are, but I know where I grew up, it was a big thing. Yeah, so if you want to sell to Muslim countries or to countries where maybe okay, I want to go in that direction. I wanted to mock SDAs, of course. Yeah, but if you want to sell pork products in Muslim countries, they don't eat pork. Okay, therefore, they may not accept that product because of cultural differences or religious differences. Okay, also marketing strategies and branding. Maybe in your country, marketing using sexual appeal, like we learned in the use of magazines for marketing, may be tolerated. Maybe in other countries they may not. Okay. Also, the impact is there will be misunderstanding cultural values, which can offend customers or reduce your sales. Also, there is an issue of currency conversion. Okay, so different countries use different currencies. E.g., Zambia uses kwacha, while US uses dollars. Okay, so this can be an issue. There was an interesting case in Malawi in 2025 where Malawi was not allowed to trade their forex, meaning that if you want to sell to Malawi, when you get paid in Malawian kwacha, you cannot change it to Zambian kwacha or any other currency. So it was a difficult problem. Okay, so problems may include fluctuating exchange rates. Also, when you are trying to change, for example, Zambian dollar to kwacha, because kwacha and dollar they change. So, for example, $1 can be selling at 25 kwacha today. Tomorrow, $1 can be selling at 26 kwacha. So that's a big problem. Okay, you can sell your items in kwacha. When you convert it to dollar, you find that it's not big money, or it's less than what you calculated it to be. Also, to convert from one currency to another, you have to pay an extra charge, so it can be expensive. Impact is this can increase the cost of imports or reduce profit from exports. The other challenge is language barriers. Okay, so communication issues arise when trade partners don't speak the same language. Okay, so the problems may include misunderstanding contracts. This one has said this, they meant this, then the other one did not understand, and you know how the elements of the essential elements of a contract. Okay, the offer, the acceptance, it has to be clearly understood between both parties that are involved. But because of language barriers, the chances that there may be misunderstanding are high. Also, there could be errors in labeling or instructions. Okay, for example, it's Vaseline. You want to say this should not be eaten. You write this should be eaten in another language. Maybe you write in Chinese. You try to write this is not written. Then you try to translate in English. It says this should be written, and you write that as a label, and you end up, causing problems. So the impact is there could be delays, there could be legal issues, and also customers may not be happy with your Vaseline, which you say that it should be eaten, but people are not getting their stomach full after eating the Vaseline. So it's it's a very big problem. Okay, the other challenge is types of goods. Okay, not all goods are suitable for international trade. For example, perishable goods may spoil before delivery. Okay, so goods that get easily destroyed, for example, fish, if you don't have proper refrigeration, it may get damaged. So it's not good for international trade. Also, illegal or restricted goods, e.g., ivory, may be banned. Okay. The impact is it limits on what can be exported or imported. Next, we look at ZRA, Zambia Revenue Authority. So the main function of ZRA is to collect taxes and manage national revenue. Okay, so it manages the amount of money that the country makes. Okay, and also, of course, it collects taxes. Okay, this is the main function. Now, there are other smaller functions of ZRA, which include, as we have mentioned, collecting taxes such as VAT, which is value added tax, income tax, which is the tax that you get when you get that you pay when you make when you get an income. Okay, and customs duty, which we discussed before. Okay, the other function is it enforces tax laws and prevents tax evasion. Tax evasion is trying to run away from paying tax. Okay, trying to do things but avoiding paying tax. Okay, so they make sure that there are laws which ensures that people are paying tax, and people cannot keep away from paying tax. Okay, it also educates the public on tax compliancy. Okay, which simply means that to make sure that the public understand how tax works and the public is able to pay tax where applicable. They also issue out tax identification number, or TPINs. If any of you has a bank account, then you should have a TPIN. So they are the ones that are in charge of issuing out TPINs. So ZRA works with customs to control imports and exports. Next, since ZRA works with customs, we're going to look at customs authority. Okay, so custom authority is part of ZRA, but with specific duties. Okay, its main function is to regulate goods entering or leaving the country. Okay, and some of the smaller functions now include it collects custom duties and taxes on imports or exports. It also inspects goods to prevent smuggling and illegal trading. Okay. It also enforces import or export restrictions. Okay, so meaning that the banned goods that are not supposed to enter the country or leave the country, such as ivory, they make sure that they deal with anyone who would try to do that, that is to import or export such kind of goods. They also verify documents like invoices and permits. They protect uh, uh, they protect local industries by applying tariffs on foreign trade. Okay, so what it means is if you want to import things into Zambia, they see if Zambia has people who are supplying those things. So if Zambia has people who are supplying those things, they are going to make sure that the import tariffs, which is the additional money that foreign companies are supposed to pay, they're going to make sure that they are very high so that uh, these foreign companies cannot bring goods in Zambia, okay, because they'll be discouraged by high tariffs. There was an interesting story that happened in 2025 between America and China during when Donald Trump was or is president. So Donald Trump increased tariffs for most countries, including Lesotho, so that these goods from these countries should not be entering the United States of America. So China was what was the highest, where the tariff was increased by much. So tariff, China also increased tariff on goods coming from America so that to discourage American businessmen from exporting goods to China. Okay, so it was a funny or in a way we used to call it a trade war, or we call it a trade war if you're watching this in 2025. So America also retaliated by increasing by a bigger percentage, so it kept on going. As I'm recording this lesson, we don't know how it will go. Yeah, but that's what the country can do. If in Zambia we're able to make our own detergent paste, then we don't need to import detergent paste. So if another company wants to import detergent paste to Zambia, we just impose tariffs to discourage them to import. So meaning that for them to import their goods, they have to pay a lot of money to the Zambian government, to Zambia Revenue Authority. Finally, we look at types of securities at Lusaka Stock Exchange. Okay. So securities are financial instruments that represent ownership, debt, or the right to ownership. So securities just refers to financial instruments, okay, that shows that this person owns this, or this person has this debt, or this person has the right to own this thing. Okay, that's what securities are, or financial securities, so to say. Okay, so they are bought and sold on the stock exchange to raise capital or invest. So we discussed this about how limited companies raise capital, right? So we're just trying to expand a bit on that. Okay, so we're just trying to expand a bit on that. So the first type of securities at Lusaka Stock Exchange are shares, which we discussed, right? So shares are simply financial instruments that represents ownership in a company. Okay, so if you have ownership in a company, then of course it means you have shares in that company. Okay. Also, the shareholders, which of course are people who have these shares, receive dividends and have voting rights. But be careful, you can only have voting rights if you are an ordinary shareholders. Remember, we discussed different types of shareholders. Okay, so the voting rights applies to ordinary shareholders, but the point here is shareholders may receive dividends and also may have voting rights. Okay, so there are two main types of shareholders. Of course, there are ordinary shareholders, or ordinary shares which give voting rights and dividends that vary with profit. Then we also have preference shares, which are fixed dividend, and they have priority over ordinary shares during liquidation, but they do not have voting rights. Okay. So example, a Zambian investor buying shares in Zambif gets part ownership of the company. You should also buy shares in Bulgam so that you have ownership. However, Bulgam is not listed on Lusaka Stock Exchange, so you can't do that. The next type, okay, we can say it's a type called stock, okay? But this term is often used interchangeably with shares, okay? But technically, stocks refer to a collection or band of shares. So stock is not just one share, it's a lot of shares. But sometimes we use it where shares shouldn't be used, okay? They represent ownership in one or more companies, okay? So that's the difference. The difference. Share is like a small thing. Stock is like a lot of shares, okay? So in Zambia, the term shares is commonly used than stocks, okay? So in Zambia, we use shares instead of stocks. The third is a bond, like government bonds, okay? So this is a debt security issued by the government or companies, okay? The buyer lends money to the issuer and is repaid with interest over time. So for example, you can give money to the government, then with time, they are going to pay you with interest. So that's a government bond, for example, okay? So bonds have low risk and they pay a fixed interest, okay? Meaning that the chance of you losing out money in a government bond are low as compared to losing money in investing in a company or buying a share, okay? Because companies can fail, they cannot make profit, but since the government bonds are backed by the nation, so the chances of you losing your money are low, okay? So the interest is not that good. So the common types, of course, are government bonds, which are issued by the Bank of Zambia. So here is a scenario. An investor buys a 5-year government bond worth 10,000 with 8% annual interest, which means after 1 year, they will receive 8% of this 10 pin. Or should I say 10,000? Next, we have debentures. So all these we have discussed them, right? So debentures are a type of bond issued by companies, not backed by physical assets, but based on the company's credit worthiness. In short, this is the debt this is the debt that a company can have, a debenture. So of course, these ones, they pay fixed interest. These ones, they pay fixed interest and is repaid on a future date, meaning that when you get a debenture, you are going to pay after some years, okay? So debenture holders are creditors, not owners, meaning that if a company has a debenture, so they are debenture holders. Those debenture holders, they are not part of the company, they don't own the company, but they are creditors to the company, which simply means they are people who have given money to the company and the company has to pay back, but they don't have a say in the running of the company. Okay, they are just people who have lended money to the company. So debentures may be secured or may be unsecured. So example scenario, a Zambian company issues debentures to raise capital for expansion, promising to repay with interest after 3 years. Okay. So this marks the end of part 3. See you in the next lesson.